Do you think having money in the bank makes you safe? Think again. The rules of money have changed, and the strategy your parents used, working hard and saving every penny, is actually destroying your wealth right now. While you sleep, inflation is silently eating away at your hard-earned cash. It's not just an economic buzzword, it is a mathematical certainty designed to keep the middle class exactly where they are. Let's look at the numbers. If you had $10,000 sitting in a savings account in 2020, today that same money has lost nearly 20% of its purchasing power. You didn't spend it. You didn't lose it in a casino. It just evaporated. This is what economists call the silent tax. The banks pay you a tiny interest rate, maybe 0.5% if you're lucky, while inflation runs at 3, 4, or even 7%. Do the math. You are literally paying the bank to hold your losing ticket. So, what do the wealthy do differently? They don't save money. They accumulate assets. In the digital age, an asset isn't just a house or gold. It's digital real estate, automated businesses, and high-yield technology investments. The old safe haven of a savings account is now the riskiest place to be. We are witnessing the greatest transfer of wealth in history, moving away from savers and flowing directly to investors and creators. To understand why this is happening, we have to look back at 1971. This was the year President Nixon took the US dollar off the gold standard. Before this moment, every dollar was backed by tangible gold in a vault. After 1971, money became fiat, currency backed by nothing but faith in the government. This allowed central banks to print unlimited amounts of money, flooding the system and diluting the value of every dollar you saved. This is why a house cost $20,000 in 1970 and costs $400,000 today. The house didn't get better, your money got weaker. So if saving is a trap, where should you put your capital? Here are the 3 asset classes that the wealthy use to escape the inflation trap. Asset class number 1, the S&P 500. This is the lazy way to wealth. Instead of letting your cash rot in a bank, you buy a piece of the top 500 companies in America. Historically, this market returns about 10% per year. It doesn't sound like much, but thanks to compound interest, it turns small sums into millions over time. You are effectively betting on the productivity of the entire economy rather than betting against it by holding cash. Asset class number 2, digital scarcity. We are talking about Bitcoin and blockchain assets. Unlike the dollar, which can be printed to infinity, Bitcoin has a hard cap of 21 million coins. It is the first mathematically scarce liquid asset in human history. In a world of infinite money printing, the only way to protect yourself is to own something that cannot be diluted. Volatility is the price you pay for performance, but over the last decade, it has been the best performing asset class on Earth. Asset class number 3, cash flow businesses. This is the holy grail. In the digital economy, you don't need a factory or a warehouse. You can build automated income streams using software, content, and digital products. This channel you are watching right now is an asset. It works 24/7, reaching people globally without me having to be physically present. When you own a business, you can adjust your prices to match inflation. When you are an employee, you have to beg for a raise just to keep up. The choice is yours. You can continue to work for money that loses value every single day, or you can start acquiring assets that grow while you sleep. The system is designed to keep you poor, but now that you have the blueprint, you can choose to opt out. Start small, buy your first stock, study digital assets, launch that side hustle. The only wrong move is doing nothing. Welcome to the new rules of money. Now you understand the problem and you know the assets. But how do you actually start if you have little money? Here is the 3-step framework to build your initial capital. Step 1. The audit. You need to stop the bleeding. Most people don't have an income problem. They have a spending problem. Go through your bank statements for the last 3 months. Cancel every subscription you don't use. Stop buying liabilities that impress people you don't like. Every dollar you waste is a soldier you are killing before it can fight for your freedom. You need to reclaim at least 20% of your monthly income to deploy into assets. Step 2. Understand good debt versus bad debt. Poor people use debt to buy liabilities, clothes, cars, and gadgets that lose value. This is slavery. Wealthy people use debt to buy assets, real estate or businesses that pay them. If you have high-interest credit card debt, destroying it is your priority. That interest rate is a guaranteed loss that no stock market return can beat. Kill the bad debt so you can leverage good debt later. Step 3. The automation. Willpower is weak. Systems are strong. Do not rely on remembering to invest. Set up an automatic transfer from your checking account to your investment account the day after you get paid. Treat it like a tax. You pay the government, you pay your landlord, and now you pay your future self first. If you automate purchasing index funds or Bitcoin, you remove emotions from the equation. You buy when the market is high, you buy when it is low, and over 10 years you win. Let's be real for a second. This path isn't easy. It requires discipline while your friends are out partying and buying new cars. They will look rich today, but they will be broke tomorrow. You are playing the long game. You are building a machine that will eventually pay for your lifestyle without you having to work. The financial reset is happening whether you like it or not. You can be a victim of inflation, or you can be a master of capital. The choice is entirely yours. If you found value in this video, do not just watch it, execute on it. Pick one asset class we discussed and research it today. And if you are ready to level up your financial IQ, click the video appearing on your screen now, where we dive deeper into the specific AI tools that can generate cash flow for you. I am watching your progress. Subscribe. Before you go, I have one final bonus tip that will save you thousands of dollars this year. It is called the 24-hour rule. We are programmed by marketing to buy things on impulse. The next time you see a gadget, a watch, or a pair of shoes you want to buy, wait exactly 24 hours. During this time, the dopamine rush will fade and your logical brain will turn back on. You will realize that 80% of the time, you don't actually need the item, you just wanted the dopamine hit. This simple habit protects your capital, so you can deploy it into assets that actually matter. Now, you are truly ready. If you want to see the exact AI tools I use to generate passive income, click the video on the screen right now. The financial revolution is here. Do not get left behind. I'll see you there.